We got a slew of earnings out this morning, and yet we are seeing the equity averages trade lower on the session. But keep in mind that it's the finer details of those earnings reports that people are paying attention to. So joining me now is Valdes of SilverBear Capital. Alan, great to have you here today.
Thanks for having me, Remy.
Well, it is a fairly quiet week, but we did get earnings reports, and that is front and center stage today. So what do you make of the latest batch of earnings?
Well, we got earnings from Goldman. Now, Goldman beat on the top and bottom, but their bond trading very light. Now, we've seen that down here on the equity side, light trading all summer, all spring, all year. So we weren't surprised to see it. And, of course, Goldman, we're down about 68 points right now, and Goldman's half of that, the weighted average. So they're weighing on. It's really one stock weighing on the market. You got 3M weighing on it, IBM, other ones, but mainly Goldman's the big, putting a lot of pressure on the Dow right now. I think overall, though, if you look at Goldman, it did beat. If you look at the other bank earnings coming out, I think they're going to beat. I think we're going to have a great earnings season. I really do. I mean, this is just a reaction also to healthcare. We lost another 2 senators. That bill was horrible anyway. But anyway, so that bill is just weighing on the market. And it's not so much even healthcare, it's the ancillary effect to the taxes, to the infrastructure, which we want to see how on Wall Street done. But if the taxes get pushed off to 2018 and the Republicans lose the Senate, I mean, we may not see a tax break, period. So that's weighing on the market, I think, more than anything else today. But as far as earnings go, we got a slew coming out later on in the week, and I think we'll have a good earnings season.
Well, you touched on a lot of topics there, including earnings in Washington, D.C., and indeed overnight we were paying attention to what was happening over in Washington, D.C. But as we head into the rest of the week, we'll be taking a look at the central banks. Now that Yellen's testimony is out of the way, focus will be on the European Central Bank as well as the Bank of Japan. But overall, it's all about policy divergence. So how do you see that affecting global markets heading into the rest of this year?
Well, the banks, they all passed the stress test here in America. In Europe, we saw good numbers out of Italy for us. They bought out that one little bank for a couple of billion, but they still have like 200 billion. So I think going forward, banks, it's going to be tough for some of these, especially European banks, not the American banks. When you and I spoke in January, savings accounts in America had $7 trillion in them. Today, with the latest FDIC out yesterday, they have 10.9 trillion in both savings and, believe it or not, 2 trillion in checking accounts. Now, if that even 1 trillion would get back into the market, you could see a GDP raise of 3 to 5% over the next 2 years. I don't know what people are waiting for. Put stop orders in if you're afraid. I mean, look at the S&P up the S&P up over 9% this year. Excuse me. The NASDAQ up over 25%. What are they waiting for? I don't know.
Okay, Alan, last but not least, before I let you go, given what we've seen in terms of earnings so far, have you changed your position on any sectors at all?
Well, I think the financials are going to surprise people. I think they're going to do better. There was a time in February and March when people said, this could be bad. It looks like things are rolling over here. But I think they're going to do good. I really do.
Okay, Alan, well, thank you so much for joining me, and thanks for your insight.